Moving on now, it's now time to hear from the guest of honor this evening. Now, he's a known face in the financial circles. He was the executive director with the Reserve Bank of India prior to his current position. Ladies and gentlemen, please welcome the whole-time member of the Securities and Exchange Board of India, Mr. G. Mahalingam.
Honorable Minister Sinha, my dear Bala, Venkatesh, CEOs of all the mutual funds, and my dear friends from the industry. It is a great occasion for me to participate. I still remember the last time when I was here for the mutual fund Sahi Hai campaign launch. And I hope this campaign also takes off in the same way, spreading the awareness of the mutual funds down below to the grassroots level. Bala showed us slides about the growth in the industry. There can be no two opinions about the growth being phenomenal, absolutely phenomenal. When you compare it with the bank deposits, as I said, the percentage is creeping up pretty fast. Another important indicator that we see on the day-to-day capital markets today is that while the capital markets were swinging to the tunes of FPI so far, we now have a good amount of counteractive influence from the domestic funds, and there the mutual funds have started playing a very important role. I would stress this aspect for the simple reason that if today the market is looking stable, if today the market is looking a little more sustainable, there are a huge amount of views and counter views in the market which play their part and bring about a sustainable trajectory. But while we look at the growth momentum in this market, and we can certainly gloat about the numbers that we see on a day-to-day basis, all of us are aware that with the growing size, a huge amount of obligations and responsibilities are cast upon the industry. There are a huge amount of accountability which comes into the industry, because all of us are now aware that this has become a very, very important asset class. It just doesn't cover the HNIs alone. It covers a large mass of people down to the grassroots level, where people have now learned perhaps that moving away from bank deposits, you have some other asset class which can pay you off better if you can go up a little more in the risk curve. So this is where I would like to stress that the industry's job has become pretty onerous. The regulator's job has become even more onerous. If the industry is not growing, the regulator has nothing much to do. But if the industry is growing very fast, I think the regulator has to be awake all the time to see that the growth is evenly paced, the growth is not a bubble which is growing, that it's not going to burst overnight, and people are going to be continuously be dragged in to take the benefit of a growing asset class. I won't like to get into a large number of initiatives the SEBI has been taking of late, but I would like to relate the Jan Nivesh program that the mutual fund industry, AMFI, and the Times Network, they are jointly launching. I would say it's a kind of a parallel to the B15 to B30. It's a kind of a parallel track. While the B15 to B30 kind of a move from the regulator envisages that the mutual fund awareness gets spread down to the grassroots level, down to tier 3, tier 4, tier 5 cities, simultaneously This kind of a Jan Nivesh program, I am sure, will bring about a grassroots level awareness by people going and interacting with people, answering their questions, clarifying their doubts, and trying to convince them that, look, our country is now having a good asset class where the common man can invest. While I talked about the obligations of the industry, I would certainly put on top the most important thing. With the awareness, we need to really be very careful about the advertisements. The advertisements can never even bring about even an iota of misinformation. This is an important investment class. We want to get the people in. We want to have the people in constantly. They shouldn't get disenchanted and leave the asset class at all. For that, we owe a sense of responsibility to the society at large, where a huge amount of efforts are coming from the government, that we need to push all the financial sector programs down to the grassroots level. The industry also owes it that the awareness is spread in a very responsible way. The advertisements have to be, number one, it has to be clear, lucid, driving a realistic message. I would definitely put realistic with font 55. I mean, we can't really paint a picture of returns which can be really multifold compared to the bank deposits. All of us are aware, on a long-term basis, I mean, if you typically look at the US equity markets, maybe the equity markets would have fetched you a higher rate of return, maybe about 200, 300, 400 basis points of return. So people should not be dragged into the industry with a lure of 25, 30% return.